Hi guys, it's Mr. Kelly. I'm not in school today, not feeling too hot, so I won't be in school. But I just wanted to explain a little bit about this new assignment we're doing. It's a little bit about options trading, calls and puts, kind of a comprehensive assignment. It's with in terms of investing, it's a big part about investing, but it's kind of sometimes difficult to grasp. I have this video that really gives a good explanation. In the front of the room, there's headphones for your listening pleasure. Um, but I'd like you to first watch this video on options trading in the futures market. And to explain it the best I can, I think I did a little bit of explaining about contracts in the futures market, but it really gives you the option to buy in the future or not buy in the future, to sell in the future or not to sell in the future. So if I were to give um, a example, it's as if let's say this guy Steve wants to sell his Camaro, and I'm in the market to buy a Camaro. I possibly want to buy it, but I may not, depending on what the value is. And we're going to give the date of June 20th. So Steve's puts his vehicle up for sale, um, and I'm going to say I want the option to buy it or not buy it on June 20th. Come June 20th, if the value of that vehicle is worth more than $20,000, I'm going to exercise my option to buy it. If it's worth less than $20,000, I'm going to exercise my option not to buy it. But in order to have that option, you enter into a contract and you pay a premium. And I'm going to pull up Home Depot right now. Home Depot is currently it is 255, so the market's open, and it's toggling back and forth. Home Depot is being traded around 290, 290, almost 291, and you have the option. You could select what dates you want. Uh, Maybe we'll go to June 24th. These are the options for June 24th for Home Depot. If if the stock option that you want to purchase is the same value or lower than the current price, which right now is at 290.93, it's called in the money. These are in the money. When you start to get into options that are being sold for more than the current trading price, they're called out of the money. And over here is the price called the premium. And the premiums gives you the option to buy or not buy. So per share, if you wanted to buy Home Depot on June 24th at $275 per share, you would pay a premium of $26.84 per share. Now when you trade options, they're in a bulk of 100. So you can't just buy an option of one share. You have to buy 100. So the strike is what you would transact at, get the stock at. So say it was at 291 right now, and come June 24th, it's at 275. You would exercise that option to buy those shares of Home Depot, but you are paying a premium for it. It's kind of like an insurance policy. Um, so the video right here does a great explanation of futures options and calls and puts. Calls are the option to buy it in the future. Puts is the option to sell it in the future. So this is the assignment, and I'd like you to just go on to it and watch the video. First, watch this video, and then go on to Yahoo. And I'd like you guys to try to see potentially what you might be interested in the future, and what call would you select? And I This is just a picture of the Yahoo of Caterpillar cat, and then just answer some questions about calls and puts. And then hopefully, what I'd like to do is when I get back is to kind of share out a little bit about what you guys found. If you found it interesting, if it's something that you don't find interesting, but it is a big part of investing. And so I won't be in school. If you have any questions, I will be on email most of the day. If Other than that, I hope you have a great day, and see you soon. Bye.